One might think that the Brexit negotiations are already charged enough. However, the conflict between the EU and Great Britain is intensifying due to a new single market bill. What are the chances of the long-awaited light trade agreement? After the UK left the EU on January 31st, there is currently a transition period in which the country and the EU wanted to regulate their longer-term relations. However, the corresponding talks do not seem to be progressing, which is causing frustration on both sides. The positions are still far apart on fundamental issues. Great Britain is striving for a free trade agreement based on the model of the agreement between the EU and Canada and rejects anything that it believes would affect its sovereignty. From the EU's point of view, on the other hand, the UK is calling for more extensive access to the internal market than was granted to all other trading partners. That is why they want to prevent the UK from undermining existing regulations and thus giving British companies a competitive advantage, which would be unfair if done in this way. For this reason, the EU calls on the UK, among other things, to publish the rules that will apply to the state aid in the future. In the past few days, the search for a solution has been made even more difficult by the fact that the British government has introduced an internal market bill into Parliament, which it believes will violate international law in a very specific and limited way. And that was a quote from the UK government. It partially contradicts the withdrawal agreement concluded with the EU in October last year. The justification given by the British government is that this agreement threatens the economic integrity of Great Britain because it establishes a customs border between Northern Ireland and Great Britain. Well, that's nothing new. That was the solution for the Northern Ireland issue in the first place. That was not the one that Theresa May wanted, but that's the one that Boris Johnson wanted. He signed it and that Parliament ratified it. Now, the single market bill stipulates that Northern Ireland will have the same customs regulations as the rest of the country. Another point of contention is the extent of government aid to businesses. According to the withdrawal agreement, the restrictions on state aid will continue to apply after the withdrawal. The single market bill now allows the UK to adopt provisions which state aid rules shall not apply or modify the effects of any relevant international or domestic law with which they may be inconsistent at date. What is the reason for this action by the UK government? Because, of course, the government was well aware of the risk of a customs border in the Irish Sea when it approved the withdrawal agreement. The motive is therefore more likely to be found in the other point, the threatened limitation of possible state aid. Because for many in government, Brexit is a means to an end and not an end in itself. In their opinion, it opens up the possibility of better positioning the economy for the digital age. Government circles say they want to break free from the state aid rules in order to support the industries of the future. This would make a U-turn in British economic policy, which was mostly very skeptical about subsidies for certain industries. According to the EU state aid scoreboard, British subsidies only corresponded to 0.34% of the national gross domestic product in 2018, compared to an EU average of 0.76%. This would mean that UK state aid to businesses would remain below the EU average even if it doubled. Earlier this week, the UK Parliament approved the Internal Market Bill on second reading with a majority of 77 votes. A law has to be passed 3 times before it can be sent to the House of Lords. Despite the protests from within their ranks, which we all heard earlier, this is only slightly less than the nominal majority of the Conservatives of 80 votes. In order to finally get the law through Parliament, the Prime Minister has also offered an amendment to the law. It could be used by Parliament to veto if the government plans measures within its framework that violate any relevant international or domestic law. Another hurdle is the House of Lords, where opposition to the bill is very strong due to the impending loss of reputation of the UK. In the end, the Lords may not block the law entirely, but they may at least delay it considerably. Unsurprisingly, the EU reacted very upset to the new British law. It has called on the UK government to withdraw the bill by the start of the next planned round of bilateral negotiations, which is scheduled for September 28th to October 2nd. The British government is unlikely to do that. In this case, the EU threatens to take legal action before the European Court of Justice. So far, however, there has been no talk of breaking off the negotiations. Obviously, the EU does not want to be the first to leave the negotiation table, and thus does not want to be branded as the party responsible for the significant economic damage to be expected in the event of a no deal. Accordingly, despite the provocation by the Internal Market Bill, the EU will keep the negotiating lines open for as long as possible. It remains to be seen whether EU leaders will adopt a different position at the October 15th summit. According to Boris Johnson, an agreement must be reached by them anyway if an agreement is to enter into force at the end of the year. The EU has set itself a deadline of the end of October, which would allow the EU Council and the European Parliament a maximum of 2 months to review and ratify an agreement. One thing is clear, even if this somewhat longer deadline is to be adhered to, the rhetoric must be significantly reduced in the next 6 weeks. In view of these short deadlines and the current resentment between the negotiating parties, it can be ruled out that there will be a comprehensive trade agreement between the EU and the UK by the end of the year. The long-held hope that the consequences of Brexit for trade can be kept within narrow limits will therefore not come true. Companies on both sides will have to live with restrictions, border controls, and probably tariffs as well. The UK government's recent move has increased the risk that there will be no agreement at all by the end of the year. Then trade between the EU and Great Britain will be subject to the rules set by the WTO. As a result, tariffs would again be levied on trade between EU countries and the UK in the future. However, these are likely to be low in most cases. According to an analysis by the Trade Policy Observatory, 56% of British imports from the EU are subject to an average tariff of around 1.5%. But that's not in the case of food. The companies should be able to offset this burden to a considerable extent with somewhat higher sales prices. A much bigger problem would be the threat of non-tariff barriers, at least in the longer term, which cause much higher costs than import duties. That means around 26% of the food consumed in the UK comes from the EU, and half of all UK food and beverage exports go to the EU. A harmonized labeling system for food products is a key element in ensuring the existence of an internal market for this product. But in the event of a no-deal Brexit, British food labeling will no longer be recognized within the EU and probably no longer the other way around. In a simulation carried out 2 years ago, they came to the conclusion that a no-deal Brexit would depress overall economic output by 3 to 8% over the next 5 years, depending on the degree of political adjustment. Given the economic situation that has already deteriorated significantly as a result of the pandemic, a government that wants to be re-elected in 2024 should not actually take such a risk. The consequences for the EU should not be so serious, but also noticeable, of course, since Great Britain is an important one for many member states. That is why they are sticking to their view that both sides actually have an interest in avoiding a Brexit without an agreement. Therefore, in their main scenario, they continue to assume that both parties will end up reaching an agreement that covers a limited number of sectors that are assigned a large economic value, for example cars and pharmaceuticals, with negotiations going through November or even could last well into December. It is also becoming more and more likely that there will be a number of transitional agreements. There are already first examples of this in areas such as financial services. Here, both sides will continue to grant the other access to clearinghouses after 2020. Negotiations would then continue after December 31st. This would not mark the end of the point of the Brexit drama, but only be another milestone in it. So while the chance of a halfway light end to this drama would then also mean that the companies involved in trade with the UK will not know for a long time what framework conditions they will have to adjust to in the long term. Due to the great uncertainty, the pound exchange rates are likely to remain very volatile in the coming weeks, although the British currency is likely to lose ground as the various deadlines approach. The conclusion of a light trade agreement associated with various transitional agreements, as we expect in our main scenario, would certainly allow the pound to appreciate somewhat again. In the event of a hard Brexit, the BOE would likely take additional action. First and foremost, the bond purchase program is likely to be increased significantly, but a negative key interest rate would then also be possible. Together with the great uncertainty about the economic effects of a hard Brexit, this would depreciate the pound significantly again. And now I want to thank my new members on my channel, which is now possible to become a member, and my new patrons on Patreon. I'm there too. Thank you for all your support. I really appreciate that. And if you now want to know more about European politics from a German point of view, YouTube has chosen another of my videos right here for you in the end screen, right next to your chance to subscribe to my channel. I'll see you in my next video. Click and enjoy. Viel Spaß and on est des Cachines.